Is the US dollar under pressure? Let's dig into it. All right, welcome back, guys. Hit that like and subscribe. US dollar. What a whipsaw here we've had. I mean, that thing's gone down, went up, came back into its resistance, and then really got hit hard again last week. Let's bring in a little better display on that one. There we go. Yeah, so we said, we had a channel here, kind of broke under, broke out. Now it's right back in that channel. But if you look on the weekly, we're looking at these candles, this big red candle. That's pretty pretty ominous. I mean, that's going to tell you there that, whatever was pushing up momentum that we had there pretty much got taken right out. And, we closed below that green candle. So really, this drive up is kind of off the table now. And then we're going to see what happens. We might get still another retest, come back into this channel. Maybe hang around, but it does tend to point, when you have a big breakdown candle like this, that you could have some more negative selling pressure on the dollar. And so with that, we can let's look at some of the other currencies here. If we look at the euro to the US dollar, same thing. We had this channel, we kind of flag patterned, and I was a little worried that we would actually do this flag and break back down into this resistance, but we just didn't get there, and the euro came and shot right back out. So not only did it break out over this candle, both these candles, it broke out over this downward trend line. So, comparatively to the US dollar, that's not looking so good for the US dollar. And the reason why I keep coming back to the US dollar is, I'm really trying to find out where asset prices are going to be. So, if we've got some weakness in the US dollar, we can expect maybe some strength coming back to the stock market. And definitely to our commodities, and we're really focusing on gold and oil. We haven't looked at gold in a while, so let's have a quick look here. Gold, it's hanging in there. It was almost breaking down out of this channel. It's come back in a bit, closing in above 1800, so that's positive. I think it's got a bit of work to do here. We want to get back above 1830, and maybe it's kind of waiting, a little later to get above and get out of that long-term downward trend. Again, if the dollar has some weakness here now, that'll definitely help push, and that might be what we need to push us to break out and over. As we talked about in the last video, when we compare the price of gold to the money supply that's out there, the gold is still quite low in value. I mean, we're looking at, we should be up above well over $2,000, and oil, we should be, somewhere around that 170 mark. Let me just bring up a few other things here. Let's go back into our inventories for oil. So looking at supply demand, we're looking right now, November inventories are at, below the 2015 to 2019 average. So that was the November 2021 level. We might be a little lower. We're pushing into the 2010, 2014 average for inventories. So, just to give you, kind of put that into even more perspective here. This would be about a 2-year time span basically. So we're looking at crude, gasoline, and distillate inventory levels. So we're definitely getting down into the range where we're steadily dropping, and even as we're oil and gas supplies, we're trying to pick up. I think we were showing this the other week. OPEC versus non-OPEC. They're not rocketing up, and overall we're up in this 101 range again here for December. December or January, I think maybe we have the January numbers. I'll have to look and see what was there now. But we're definitely, oil demand is increasing, and the oil supply does not seem to be keeping up with it. Another graph here, just kind of showing for 2021, it's the dark blue. U.S. crude oil inventories, 4-year average is the red line, and then we've got 2020 is this dotted blue, 2019 was the purple. So you can see there's the trend here is definitely we're at or below the lowest of all the past 4 or 5 years for inventories. Global onshore oil surplus versus the 2017 to the 2019 average. So we're pretty much at the average for global onshore oil surplus from 2017 to 2019. It looks like a little bit coming in, dropping below actually. Global oil demand, natural decline of supply. So we talked a little bit about this the other day. Just saying, we kind of expect that oil demand to kind of peak out at 120. But looking forward, some of these forecasts, if we're always going to be at having less oil than we can meet demand, I mean, what happens to the price of oil? I mean, it could literally just skyrocket here at this point. So something to keep in mind, if we have this long-term gap on energy on that supply demand curve, we definitely got to think about what that looks like and where we're going to be with these companies and these oil stocks. Just to give you an example here's a Bloomberg letter from, I think this was the CEO from Shell, mentioned that he said, the tightness is caused by investment plunging to historically low levels. And the factor is that oil and gas is not declining with the IEA outlook, and it's actually the demand is going up. So he's saying their company will enjoy these benefits of the rising market, return more money to the shareholders, and fund its energy transition strategy. But that doesn't mean it will increase spending on fossil fuels. So they're basically trying to lean heavily on now in the mindset to not invest into the rising market, because they believe that by the time they put that investment out there and start harvesting the rewards, it'll be beyond that peak. And that's kind of a stance that a lot of companies are taking now at this point. So I think there's going to be a lot of demand for oil and we're going to have a massive shortfall for it. Even here last October, we have the CEO of Aramco warns that world spare oil supplies are falling rapidly. So you might say, oh, well, Saudi Arabia has, in the Middle East, there's so much oil there, they could flood the market if they wanted to. But that doesn't seem to be the case. Again, looking at some companies, if they were to buy back all of their shares, this is one investment firm called 9 Point. They brought up this chart, and basically they're showing if the company put all of its free cash flow into share buybacks and to paying down debt, that this is how long it would take that they could outright privatize their own companies. So, even conservatively, if we look at this in 5 years, for a lot of these companies. I mean, you can only imagine as they keep buying back all their shares with their money they start making here, and they're not putting it into oil investments, what kind of return that would do for the share price and what that would do for the shareholder. Go back to the charts here for a minute. Just wanted to go over, you know, I know a lot of other people might be investing in the US more so than Canada, so I thought one company that looks good here is Phillips 66. If you look at this chart long term, you know, it's really struggling to get out past this point here over 90, but you know, I think once it does, it's going to run. And you know, we've got this one channel here kind of marked in here in light green, and you know, coincidentally that channel runs in and meets up at this line at its previous high of about 118. You know, probably in a good time frame, and in maybe, you know, we're looking March. That's very possible. So, you know, you're looking at almost a 50% gain here to get up there. And if you want to compare the price of oil to the stock price, you can see we were actually at this peak stock price back at, you know, $70 oil. So granted, there's some hedging, there's some contracts here that were still in play from the past few years at cheaper oil, so they're going to have some of their sales that they forward sold that are going to be in the lower range. So somewhere, you know, maybe, I don't know, I think actually, you know, $72 average from, if you look at what they hedged versus the price of oil now, you know, $70 average is not unreasonable that they would be making money at. And so, you know, share price being up here is not at all unreasonable. And if oil keeps going up, I mean, that obviously is going to just keep pushing these oil companies higher and higher. We had one more thing here. Let's see what this looks like here. You know, we talked about this in gold. This is the commitment of traders. And this is as far back as this graph goes, but if you kind of look and you see the commercials in black and the non-commercial in blue, and if you look at the commercials, and when they're basically no longer selling, everything down here in the negative is when they're selling heavily. And when they're not selling too heavily, and they're actually, the commercials were buying here at one point in March of 2016. So if we go back, look at oil, just to compare what we were in March of 2016. Computer's just thinking here. Bear with me. Okay. So 2016, lo and behold, when commercials are buying oil or really very light on the selling, we were at the bottom of the oil market. And then if we go back and look here, when they were selling heavily, it was January of 2014. So we go back to the oil. Oh, I think I made a mistake there. Yeah, no, sorry. We jumped ahead a little bit. Go back to the 2014. So they're selling heavily. You can see oil was much higher. So, you know, they were selling right at the peak. Let's go back to something a little more recent here now. So, you know, they ironically really were selling hard coming into the beginning of 2020, which is interesting. And now they've gone back to where, you know, they even went to buying again here. If you look into this kind of August 2021. So look at right there, August 2021 was a perfect buying point for oil. And you know, they're really not they're not dumping a bunch of oil into the market. You know, there aren't a lot of, you know, so to me, this definitely doesn't tell us that we're at a point where oil's going to turn around and go down. I mean, if anything, we're at a point where oil is, call it a bottom, according to the commercials, and we're not going to be at any point of selling until you get either the commercial selling heavily or the retail market is buying substantially. You know, even at least up into this range, I would say. So we got, I think this is one of the safest bets here to, you know, when you're looking for an investment. You know, we could look at the cryptos. Everyone likes the cryptocurrency and Bitcoin. We did break out of this channel. I'd like to see us get over that 43,000 here and close above this candle. I think that would be a little more confidence that we've got some traction here with Bitcoin. If we go down and look at Solana, not bad. We definitely bounced off the support line. But we got this looming weekly candle here from a few weeks ago, and until we get above that, I mean, it's just it's a tough sell. You know, you're gonna have resistance again right here at 133, so you're basically going to be under all the moving averages. You know, so, you know, I see a lot of these things, companies that have come down a lot. Facebook got hit really hard. Everyone wants to buy the dip, and you know, it's still a gamble. You're buying onto these things. There's nothing there there's no supply demand working in your favor to push that asset value up. You're just basically kind of, to me, it's rolling the dice and a lot more of a gamble than anything. So yeah, that's my 2 cents for this week on oil again, and the currency. So I think we see nothing for headwinds on the currency, on the dollar. We don't see any headwinds on oil supply demand. So we should see some traction with gold. We should definitely see a lot of traction with oil. And yeah, definitely, you know, shop around. Look for some of those companies that you like. Phillips, you know, even looking here on the financials, they don't look so bad if you look at the analysis. I think even the forecasting, go down, what's our highest? Highest is 107, average of 99 of the analyst price targets. Sorry about that. It just keeps reloading on me. Anyways, good earnings, strong earnings. I think you're going to see companies still doing more share buybacks. There's going to be less shares in circulation driving the prices up. And, you know, who knows? We could one day here, if we end up going back, you know, we showed that chart there earlier in the week where, you know, if gold and oil really does follow the money supply, and we've got all this money out there in the system, and oil doubles from this point, I mean, look out. I mean, these oil stocks are going to go crazy. So, yeah, definitely start looking, start fishing around there, and we'll keep you posted. All right, thanks, guys. Hit that like and subscribe.